So now we're gonna go to the theoretical part. What synthetic assets are in the context of DeFi. So let me show you my presentation, and I think it will be quite interesting for you to read through what it is about and to talk about it. So to understand what synthetic assets are, we just need to give a simple definition. So a synthetic is a financial instrument that imitates other instruments. So it's a sort of a pyramid of one financial asset hidden or wrapped by another financial asset that goes to be a sort of emulator or a sort of equalizer of one asset with another real asset. So we can do a sort of virtual assets in one from real world to a synthesized protocol, to any other protocol. So, in short, synthetics are comprised of one or more derivatives, which are assets that are based on the value, and it may include several parts. So the base value, and it may include a variable value. So variable value may be futures or forwards or swaps from the classical market. From the classical market, or options or credit derivatives. So those are variables that can affect the cost, and that will allow to hedge the risks for those who buy it. So the same as insurance mechanism. So when you buy an insurance, you're buying an option that can happen in future. So in case your health is not okay, in case you have a car accident or anything else is happening which is not pleasant, and which you need money for, so in the future, so you are just giving, like with an insurance instrument, you are hedging your risks, you are giving the options in future, and you are buying the options of what will happen in future, what could have happened in the past, and what may happen in future. So this is what synthetic mechanisms are about. So what they do. They create liquidity. Of course, it's very important for the market, especially for crypto market. They give access to the market, and they give more room for new markets, for leverage as well. And if we go to DeFi, the same mechanism are working for DeFi industry, like they do in a classical finance market. So what Synthetix do in DeFi, they do scaling. Well, first scaling they scaling assets. So one of the biggest challenges in the space of bringing real world assets on chain in a trustless manner. So this is one of the challenges. And if we take the example of fiat currencies, so why it's possible to create a fiat collateralized stablecoin like Tether. Another approach is given by Synthetic. For example, they create US dollars without having to hold the actual asset in custody with centralized counterparty. So this is a sort of equivalent of stable coins, how stable coins work, and those algorithms allow to find the alternative for stable coins, to create another value which is tied to the initial one. So this is this is the mechanism how it works. Because for many users, price exposure is good enough, and Synthetix provide a mechanism for real-world assets to be traded on a blockchain. So we are moving real assets to blockchain area, to blockchain industry, and that of course helps growing it. So the second aspect is scaling liquidity. So it's quite evident that the markets are lacking lots of liquidity. So this is one of the issues, and money makers play an important role here for both long tail and established crypto assets. So, but they have limited the financial tools for proper risk management. So Synthetics and derivatives more broadly could help market makers to scale their operations by hedging positions and protecting profits. So this is a financial instrument that scales liquidity. Another aspect is scaling technology itself, because we have a sort of a blocker in technology. So while Synthetics have traditionally been available to only limited number of people, but now the technology is available for cross-chain communication, as I mentioned in the news, which was mostly limiting the availability of assets in decentralized exchange. So we're scaling technology from one blockchain to another. And as I mentioned, the last aspect here is scaling participation. If we look at my presentation, so the scaling participation is the last aspect, at least official aspect, as I found out. I will add a couple of mine, and Synthetics are not available to common people, to only sophisticated investors with enough qualification could use those platforms in financial market. But now it allows to use those mechanisms for the whole range of people who are willing to be private investors. So that's how it works. And of course, as I promised, I will add a couple of my reasons why Synthetics are useful for DeFi. And one of the main reason is, I think, is an alternative for anonymous cryptocurrencies. When cryptocurrencies which are not open in terms of their hash rates, can be sort of a tool for hiding the path how your money flows. I would not say that's money laundering, but still it's Synthetics resolve those issues. If you buy, for example, Bitcoin, imagine you are Satoshi Nakamoto's friend who mined many Bitcoins in 2010, 11, 12, for example, and you need to hide your funds so not to be de-anonymized. You can wrap your Bitcoins. Of course, it will be visible, but they will dive into Synthetics and synthetic assets, and nobody can trace the path the assets go on, and then they will dive back to Bitcoin with a new hash rate history, with a new address. So that's a certain chain of hiding the trace, how your funds are flowing. So this is another. Well, and like I mentioned, another use for synthetic assets is just insurance, making insurance. For example, for miners, Bitcoin miners have to mine Bitcoin, pay for electricity, pay for equipment. So, but like trading with future oil, they can do it the same with electricity. buy future oil, buy risks, buy some responsibilities like derivatives for buying some new equipment. They can do here as well, do that here as well, and use that mechanism. Now let's move to on to a more practical part. So I will outline to you how it works, what schemes, what mechanism and workflows are applicable in synthetic mechanisms. So one of the first projects was Abra, and you can see how they set up their workflow for assets. So the purple ones are real assets, the green ones are synthetic assets. So the initial assets of US dollar is turned into Bitcoin, and Bitcoin is synthesized into US dollars back, or Ethereum. So this is the scheme, the workflow that is applicable in Abra. So the second mechanism I want to show you is MakerDAO. You know, MakerDAO is one of the best and most valuable projects because lots of value is locked up, as you've seen in my chart during the news survey. So MakerDAO does it very simple. So they take Ethereum, they lock Ethereum, and provide DAI stablecoin, which is so-called algorithmic one, and it is equal, according to smart contract, to locked to the number of locked Ethereum. So this is how MakerDAO works. Then Synthetix. This is the project we're going to talk about with more detail, and I want to show you some of the aspects, how it works. Synthetix is the protocol which allows people to synthesize their real-world assets and to transfer one assets from real world or another cryptocurrency to their trading platform. So what they do to do that, we just need to buy S and X token in any of the markets. Then they are locked and minted as USD, so synthesized US dollar, and it can be also turned into synthesized Ethereum. Their prices are connected directly to the price from real world by means of Oracle. So, and they are equal to real US dollar. Their value is equal to real US dollar and to real Ethereum. So this is what happens on in that protocol, and this is the workflow we can see. So let me show you. How this protocol works. If we go to, of course, we need to go to DeFi Pulse first of all. So that this is our bookmarked website and observer. All the synthetical assets are hidden in derivatives section, derivatives tab. We see that Synthetix is taking the major part of the market. So they $2 billion, a little bit above $2 billion, and far behind, and all the rest are far behind. What we need to do is to click to read the information about Synthetix, what it is about. We can read, of course, and research how it works. So in general, like I said, they by that process of locking their own token S and X, they support over 3 synths or derivatives representing, they can represent whatever. They can represent fiat currencies, any other commodities, gold, silver, any other assets, stocks, indexes, derivatives, all sorts of derivatives. So Synthetix has a native token SNX. They lock in collateral as SNX and Ethereum to mint those synths. Those synths are minted and are freely traded as ERC20 tokens based on Ethereum blockchain. So this is so-called non-custodial decentralized exchange, and and they can revert back those synths, burn those synths in exchange back to real assets. So initial assets, it can be SNX token. So that's why you should understand why the price of Synthetix token SNX has grown up with the growth of the market proportionally, so to say. So in December we see that it was only $4, but now it has risen up to 20. So this is a good growth for the market. We see why this token is in demand and why the price has went 5 times up. So this is that was a good investment for some of the users. So let's go to the practical part. We dive into the website over here. So not to get a phishing link, we use the official from DeFi Pulse, and can read about this project, watch the statistics. I have opened this tab. So this is the statistics of the whole market capitalization. So volume of Synthetix, insurance ratio. So we need to provide 500% of ratio to claim Synthetix. So the number of Synthetix staked and all the other criteria. So we read how it works and can dive into staking process. Let's see how it works on staking. So staking works pretty simple. In terms of the mechanism, we mint. We connect our wallet. So through Wallet Connect, we can use Wallet Connect or MetaMask procedure. So what we normally do with decentralized exchanges, and go and mint our SUSD tokens. So we go and mint, and then can do trading. Let me show you, so we don't need statistics anymore. Yeah, this is the trading page on Quenta application. So the link is in the main, where we can see all the tokens presented currently here. So let's have a look at them closer and see how they work, what they or what their purpose is. So, for example, we can see synthesized US dollar, which is equal to $1. We have synthesized Ethereum, we have synthesized Euro, synthesized Bitcoin, synthesized DeFi token. So this is the index of key DeFi token. That if you don't want to buy the whole any particular project coin or any other token, you can buy the whole index of DeFi, and thus by doing that you hedge hedge your risks by buying the index. So like S&P 500 or Dow Jones or whatever index can be in real financial market, to make it clear for you. So what is interesting, IBTC, what I means, we know what S means. It means synthesized, but I means inverse. So opposite to synthesized token. So, and IBTC, this is a reversed synth, and Ethereum as well. So we have a couple of I's here. And this allows us to bet on a fall in the price of an asset. So if we are in short, if we are doing short, so we are holding IBTC or Ethereum, we see the price is different. So if we do that, we just hedge our risk and play short. So this is an interesting mechanism. Then what else? SAX, CEX. This is the token for synthesized centralized exchange index. So it's 140 and 400, 1,400. So those are interesting indexes, and of course real world indexes that we can have in real world. For example, of course, it can be any cryptocurrency, silver ounce, gold ounce, and any other tokens can be synthesized, representing the real token price. And of course, Japanese yen, pound sterling, so Swiss franc. What else can be interesting here? All the key cryptocurrency, Tezos, Litecoin, Tron, Ethereum Classic, Dash, Monero, Uniswap. You can see that in the list. You can know Nikkei index, so it's the Japanese market index. FTSE British index. So any other index can be presented here. Even Apple shares, so individual stocks for Apple, so can be synthesized. Whatever can be synthesized, and there are many goals to use those synthesized assets. For example, we can do it for market speculation, so you can bet on raise or fall for the price of many assets without using exchanges with KYC. So you avoid doing that, you're trading directly. Another goal is stablecoin. Stablecoin usage has died. The most popular decentralized stablecoin so far, the synthetic fiat is an alternative, so to say, for using those assets as alternative for stable coins. So like we see, we have many alternatives for stable coins, Japanese yen, British pound, and many others. Any other currency you want to use. So hedging the risk, as I mentioned before, this is the most popular use case for derivatives along with speculation. So hedging is a sort of insurance against the fall of the price of an asset. So for example, if we take Ethereum 2 aspects for the price of the Ethereum to fall, so it's still impossible to withdraw because the staked Ethereum is locked, like I mentioned, on Leader protocol or whatever else, and you can't withdraw the real asset, but you can deposit the contract of Ethereum, and when Ethereum price falls, the staker will cover the loss through profit from the short position. So this is how it works. So index investing, like I mentioned, we can invest we avoid selecting a special cryptocurrency. We just invest to the whole share as an index. So stocks and commodities, like I mentioned, we have the ability to buy and sell gold, silver, whatever we want. Again, without KYC, it's an alternative for anonymous coins. And the interesting thing is trading with leverage, trading in derivatives like in classical markets. So using leveraged capital, using sort of leverage allows us to open larger position with less capitals. But this is only available for experienced traders who are sophisticated in that kind of operation. So newbies do not need to do that, and are strictly not recommended. So this is the main functions of how synthetic assets work, and how they can perform the value to us, to the market. So my goal is not to teach you how to do that, but to give you a general understanding how this market works, and to give you understanding what way you can develop your knowledge in the future. So how you can develop your skills, your analytical abilities, so that you know all the aspects of DeFi market. It's not only decentralized exchanges, which are mostly popular and applications are important, but you can use all other types of instruments like yield farming, which we discussed last week, and of course synthetic assets. So besides that, of course, there are any in Synthetix as a product. We can see governance function. For example, we can see governance function like in many other DeFi protocols, and you can use your vote, your synths, to vote for any decision. So, for example, it gives us the possibility to lower the fees on Ethereum. You know why it's happening now. So we can either vote for with our governance token with as yes, synthetic, or I no. So this is inverted no. And this is quite interesting mechanism, like in MakerDAO. You see that is showing a decentralized autonomous organization function in DeFi sphere. So this is another aspect. We see that one protocol comprises all the other aspects of DeFi market. We can not only synthesize, we can not only trade yield trading, to do yield trading, and to convert our funds from one protocol to another. We can use DAO mechanism for voting, for making the decisions. We can see that all the DeFi aspects are combining together in one protocol, and give us the unique opportunity to use the tools and to make the most profit of those tools. So in short, I would like to encourage you to learn more about protocols, to try to play at least $100 with all those assets, and to see how it works, so that in future you could be a better person, a pumped up person, so to say, and make your own interesting decision, interesting combinations for investments. So thank you for watching. I hope it was useful for you. Please join us next week on Friday, the same time, 1:30 Central European Time. We'll continue talking about DeFi protocols. Thank you.